This scenario is a job order cost problem where we end up calculating predetermined overhead rates, using that to apply overhead, then calculate manufacturing costs to individual jobs. Like here we have job D70 and job 200, and ultimately then we're also trying to calculate the sales price, and we're going to compare and contrast. This video is going to cover part one. We're actually going to use a plant-wide predetermined overhead rate, so just one overhead rate for the whole entire company. Part two, which is going to be in a separate video, is going to cover using departmental overhead rates, because for this company and these products, they actually go through two different departments, and that's molding and fabrication. Again, a separate video. And this is covering exercise 215, a very similar problem, same setup, just different numbers, so you can take a look and help as far as guidance for working your particular exercise problem. So we're going to clear a path here and just focus on what is the first thing I need to calculate. The first thing I need to calculate on part 1A is the plant-wide predetermined overhead rate. So ultimately what we need to do is add together total variable manufacturing overhead estimated cost, and I'll make a point, the information here towards the top is just estimated, to estimated total fixed manufacturing overhead cost, divide it by whatever we feel like is the cost driver or the activity, which here is going to be machine hours, to get one overall plant-wide rate. So let's go ahead and do that. One wrinkle here is they don't give us total variable costs, they give us rates. So we're going to have to do a little calculating, a little bit extra work to get there. So for a molding department, we're going to take that variable rate per machine hour and just multiply it times the estimated. Again, these are all estimates, hours that we use to calculate that. So 27,000 estimated machine hours times an estimate of $5.40 variable manufacturing overhead per machine hours gives us an estimated variable manufacturing overhead dollars of $145,800 for molding. Similar process for fabrication, 37,000 estimated hours times $5.40 that we previously estimated for variable manufacturing overhead per machine hour, and that's going to give us estimated total dollars of $199,800. Then we just need to add those two numbers together, $145,800 for molding of our estimated total variable manufacturing overhead to $199,800 for fabrication, gives us a total company-wide estimated variable manufacturing overhead of $345,600. Now, you might have questioned why I did these individual calculations and why I didn't just say, well, if I add the 2 hours together, it's 64,000 estimated hours. They both have the same rate of 540. I could have just multiplied that out and come up with the same number. That is true. The reason I went a little bit of the scenic route in this particular problem is don't always assume that these two rates will be the same. So your exercise may have different numbers, your exam may have different numbers, so that's why I took a little bit longer route here. Don't make that assumption. This is just estimated variable manufacturing overhead. Companies like this typically also have fixed manufacturing overhead. I'm going to just pull it from the total here, $1 million of fixed manufacturing overhead, add it to my prior estimate of variable manufacturing overhead of $345,600, and that gives me total estimated overhead, variable and fixed, of $1,345,600. We're not done. We still need to divide this by our estimated activity level, our cost driver, which again, we don't need to isolate separately because this is plant-wide. So divide that by the estimated hours for both departments of 64,000, and ultimately we come up with a plant-wide, overall company-wide overhead rate estimated of $21.03, and that's what we're going to use to apply overhead to our jobs. So far so good. We've knocked out at least part A. Now we're going to move on to part B, where we're going to utilize that information, that's just estimated overhead, predetermined overhead rates, and help us actually apply manufacturing costs to our two assigned jobs. Now the bottom part here gives us actual costs for these jobs: direct material, direct labor. It also gives us actual hours. Again, these were just estimates of what we thought was going to happen. These are the actual hours for these individual jobs that they utilize machine hours. So I'm only, for sake of keeping this video as short as possible, going to do this for job D70, similar process for C200. So let's go ahead and lay out the information and again, get us a little bit of a path. Because of the fact that I'm using a plant-wide rate, I don't need to split this out between molding and fabrication. I can just slot over my totals here. Total actual cost that I'm going to utilize for direct materials for this job is $699,000. Total actual direct labor costs for this particular job is $400,000. Now, the $27,000, you notice I'm not moving over here because this isn't cost, that's just the machine hours. I'm going to, remember, 3 different costs we typically are included within our products: direct material, direct labor, and manufacturing overhead. With a normal costing system like this, we're going to apply our manufacturing overhead based upon our predetermined rate. So we're going to take that rate we calculated in Part A of $21.03 per manufacturing overhead dollars per machine hour, multiply it now times the actual number of machine hours of 27,000, and we get the overhead we're going to apply based on the estimated rate and actual hours is 567,810. I'll make a quick point here. Sometimes when you pull problems, there's coincidences. And I don't know if you noticed that the machine hours for molding was 27,000 and total actual, and this was estimated hours, total actual machine hours for job D70 for both departments, 27,000. That is just a coincidence. That they have no commonality or purpose behind it or relationship. It is truly just a coincidence. Now, if I add all 3 costs together, direct material actual cost of $699,000, actual direct labor cost of $400,000, and the overhead I'm going to apply in my normal costing system of $567,810, I get a total cost for job D70 of $1,666,810. So I'm halfway there. And the good news is I've got a lot of my main calculations over with, so I don't have a lot of work to do left. Part C is, it's nice to know what the total cost of the job for you was, but what are we going to charge our customer? So it mentions in C that the price that we're going to attempt, the bid price, attempt to charge our customers is going to be 150% of total manufacturing costs. And again, I'm just going to do it for job D70. It would be similar for job C200. So I'm simply going to take my total cost of this job of $1,666,810 times the 150%, because that's how they come up with the bid price, and I get a bid price, what we're going to attempt to charge the customer for this job, of $2,500,215. I'll make a point that sometimes on the exam or extra credit, this is going to be worded a little bit differently. And I feel like that trips students up sometimes where they understand the concept and they just overlook actually applying that particular concept. For example, what if instead of saying 150% of manufacturing costs, this said, oh, we're going to mark up the price by 25%. If this was a markup, like 25%, we'd take that cost of $1,666,810, multiply it times the 25%. That would be the amount over and above the cost, and then we would add that to the cost. So just don't get tripped up on the wording. Make sure you're paying attention and really reading that when you jump into the exam of how to apply that selling price. The last item, D, says, what is cost of goods sold for the year? Now, I will tell you, in this video, I'm not going to calculate that for you. And the real reason why is to calculate, I would also need the cost of job 200, which I didn't calculate. Ultimately, the answer for part D is going to be the addition of C for both of these items. Or, excuse me, not C, B. For both of these items, I'm going to take the total manufacturing cost, for example, of job D70 of $1,666,810. And once I also do this for job C200. I'm going to add that to it. And coincidentally, that's going to be total cost of goods sold for the year for the company. Now, again, that's a coincidence based on this particular scenario, and this will make more sense when you actually jump into chapter 3. It probably doesn't make a lot of sense now. The reason why these equal total manufacturing costs and cost of goods sold is in the scenario here, it tells us if you read through, there's no beginning and ending inventory. So basically what it's saying, any costs that we add in terms of material, labor, and the amount of overhead you apply, we don't start with inventory, we don't end with inventory, so assume that those units are actually going to be sold. So in this scenario, total manufacturing cost is going to be equal to cost of goods sold. Again, separate video if you want help tackling that part, where we're going to look at part 2 and use departmental rates.